Hello everyone, and welcome back to Explain the Charts. Today, on October 2nd, 2025, we are taking an in-depth look at Apple, symbol Apple, which has been making major headlines and significant moves in the market. The stock has surged to its highest point this year, and the primary catalyst is overwhelmingly positive news surrounding the new iPhone 17. First, let's cover the current events that are fueling this rally. Multiple sources are reporting that demand for the new iPhone 17 lineup is tracking 10 to 15% ahead of last year's iPhone 16. We're seeing reports of extended shipping lead times, particularly in China, which indicates that demand is significantly outpacing the initial supply. This has created a very bullish sentiment among Wall Street analysts. Wedbush was a standout, raising its price target to a staggering $310 per share, stating that investors are clearly underestimating this iPhone cycle. Bank of America also reiterated a buy rating with a $270 target, and just a few days ago, JP Morgan boosted its price target to $280. This wave of optimism is directly tied to the successful product launch event in September, which unveiled not just the iPhone 17, but also the new iPhone Air, Apple Watch Series 11, and AirPods Pro 3. Of course, it's important to consider the counterarguments. Some analysts have raised concerns about the high 37 times PE ratio, questioning if the growth can justify this valuation. There is also some debate about the product mix, with a Jefferies analyst noting potentially weaker demand for the higher-priced iPhone Air compared to the base models. Now, let's see how all of this incredible news translates to the price action on the charts. Looking at the daily chart for the past year, we can see the full story of 2025. Apple actually had a rough start to the year, pulling back significantly from its December 2024 all-time high of around $259. The stock fell as much as 30%, finding a bottom and a major support level down in the $170 range back in April. That low point marked a significant reversal. From there, the stock began a steady climb, but the real fireworks started in early June 2024. We saw a massive gap up from around $193 to over $207 in a single session, a move that completely changed the market structure. Following that explosive move, the price entered a consolidation period for about 2 months, trading sideways mostly between $210 and $230. This period of consolidation was crucial, as it built up energy and established a solid base for the next major move. That move began in earnest in mid-September, perfectly correlating with the iPhone 17 launch and the subsequent reports of strong demand. You can see the price breaking out of that consolidation range with significant volume, which is a very strong bullish confirmation. The stock then surged, culminating in the rally we've seen over the last 2 weeks. Now let's zoom in on the most recent price action since the beginning of September. The key day to look at is September 22nd. On this day, fueled by the analyst upgrades, the stock jumped over 3% on massive volume, closing at $256.08. This move pushed the stock to its highest level in 2025, reaching an intraday peak of $256.64. Since that powerful breakout, the price has entered a tight consolidation pattern right below the all-time high. This is what traders often call a bullish flag or pennant. It's a pause that refreshes, allowing the stock to digest its gains before a potential attempt at new highs. This brings us to our most critical resistance levels. The first is the recent high from September 23rd at $257.34. Above that is the ultimate test, the all-time high from December 2024, which stands at $259.02. On the support side, the bottom of this current consolidation range is around the $251 to $252 area. This level has held up well over the past week and serves as our most immediate line of defense for the bulls. Switching over to the 1-hour chart, we can get a much clearer picture of this short-term battle. Here you can really see the defined trading range that has formed over the last week. The ceiling, or resistance, is very clearly established between $257 and $257.34. The floor, or support, is holding strong around the $252 mark. For day traders and swing traders, this range is everything right now. A high-volume break above $257.34 would signal that the bulls have absorbed all the selling pressure at these levels and are ready to challenge the all-time high. Conversely, a sustained break below the $252 support level would be a short-term victory for the bears. Such a move would indicate that the upward momentum has stalled and could trigger a deeper pullback. If we were to lose $252, the next logical area of support would be the psychological $250 level. Below that, we would look for the price to potentially retest the prior breakout area around $246. So, let's recap the key takeaways and potential scenarios for Apple stock. The fundamental story is overwhelmingly bullish, with strong product demand driving analyst price target upgrades. The technical picture is also bullish, with the stock consolidating right under its all-time high after a powerful breakout. The key resistance levels to watch are the recent high of $257.34 and the all-time high of $259.02. The key support levels are the immediate range low around $252, followed by the $246 breakout point and the major prior resistance at $240. Our primary prediction, with a high probability of around 75%, is a bullish continuation. Given the powerful fundamental catalysts, we expect the price to break above the $259.02 all-time high in the near future. A convincing break and hold above this level would put the stock in price discovery mode, making the analyst targets of $270 and $280 very achievable medium-term goals. A bearish reversal scenario, which we see as less likely at about 25% probability, would involve a rejection at the all-time high, forming a potential double top. The first confirmation of this would be a break below the $252 support. This scenario would gain strength if we get unexpected negative news regarding iPhone sales or new regulatory headwinds. The most important thing to watch for now is volume. A high-volume breakout above resistance reinforces the bullish case, while a high-volume breakdown below support would give credibility to the bears. That's our complete analysis of Apple stock for today. It's a fascinating setup with a strong narrative meeting a critical technical juncture. We hope this breakdown was helpful for you. If you found value in this video, please hit that like button, subscribe to Explain the Charts, and let us know your thoughts on Apple in the comments below. Finally, a quick disclaimer, this video is for informational and educational purposes only and should not be considered financial advice. You should always conduct your own research and consult with a professional before making any investment decisions.